Today PCF Bank has released its preliminary results for the year ended September 2018. Very strong set of results and very pleased with the progress we've made through the year. Our profit before tax has increased 44% to 5.2 million. Our EPS is up strongly as well, and our board has recommended a dividend of 0.3 of a p, up from 0.19p last year. PCF is a specialist bank. We're unique in that we're AIM listed as well, which stands us out in the marketplace. We were authorised in 2016, commenced trading in 2017, and the model is to use cheaper cost of funds from the retail deposit market into our existing markets that we've been operating in for 20 years. So historically, we're a finance house, lending to consumers and businesses for asset finance and consumer motor finance, utilising those cheaper funds to grow the business and scale the business up to make best use of the operating model of a bank. And then more recently, diversification into new markets to get us towards our target of a sizable banking operation within 3 to 5 years. The business's strengths this year has been built around organic growth of our existing portfolios, where we've seen a strong 50% growth in our portfolio, mainly in the prime sector, and that's also been reflected in a very low and stable loan impairment charge of 0.5% in the year, exactly the same as the previous year. We've also added to that 2 diversifications. The acquisition of Azul Limited, a specialist financier in the broadcast and media market, and a pilot scheme in the property finance market, specifically in bridging property finance. All of which have brought our medium-term targets of a 350 million portfolio and a 12.5% return on equity forward 1 year. Previously expected to reach those targets in September 2020, now looking to achieve those targets in the current financial year. Looking forward, the organisation will have 4 strategic objectives for 2019, and then I'd like to go on and just tell you about our longer term targets as well. In 2019, we will continue to drive the organic growth in our existing markets that we've seen in 2018. We think there's more room to grow into that space, particularly the prime consumer market, where we're going to use some investment in technology to improve the customer experience and have a better proposition to the prime customer. We believe that growth can be almost as strong as the current year's new business originations growth, before it becomes a more mature product going forward. Secondly, an integration of Azul Limited into our business, a very exciting prospect, a earning enhancing acquisition from the day we acquired it, a very niche business run by experienced people in a very exciting sector. We think that has growth, but on the 2018 results that they'd put out, a very good addition to the business. And then the second diversification of bridging finance, which I've already spoken about as well. On top of all of that, investment in our people, investment in our governance structure, investment in our IT to keep pace with each of those new diversifications and to keep pace with the organic growth that we've delivered so far this year. Our longer term target, with that organic growth and with those diversifications under our belt, we feel as though we have underpinned the longer term portfolio target of 750 million in September 2022 and a return on equity of 15% over the same time frame.